Felix here, and another blood in the street kind of a morning for stock markets across the world, particularly in the US. What does it all mean? What should we be doing? Should we be buying the dip? How much lower can this go? Just a couple of the questions we're going to answer here in the next few minutes to basically give you the same kind of briefing you would get if you were working inside of a main bank or brokerage or something like that. It's always my intention to give you the best information so you can make better decisions. And let me share my screen with you. Let's jump straight into it. So why are markets actually crashing more? Like, we need to understand that. And how bad is this? And is this really all about tariffs, or is there something else brewing underneath the surface? I want you to understand that. How low will we go? And I see the questions here, how is the market bottom in? And what do we do now? I mean, this is probably the most crucial thing, right? And then something just happened. Data point just came out, really big data point that just literally nobody expected out there. Not one bank, not one analyst, not one commentator. And what does that mean? And what stocks should you avoid like the plague right now? Because they're going to make you poor as a church mouse. And what should we be buying? Like, is there something we should be buying right now? I'll literally give you some ideas. And then we're going to do a therapy session. Well, I call it Q&A, but it'll probably be more like a therapy session. Would these 9 things be useful for you? If they would be useful, write useful in the chat, or just write the number 9. That'll also do. I would show you Winston, but he's abandoned ship. Winston, come on back. Go to bed. Let's see if we can get a Winston cam on here to make ourselves feel a little bit better. Apparently not. Winston, bed. Come on. Disobedient dog this morning. The only place you can see him is right here. He's unfazed by the whole thing. His portfolio is apparently doing very well. He's mostly invested in tennis balls and snacks. Now, in all seriousness, I'm going to show you, and if you are a bit squeamish this morning, turn away for a moment, right? Just turn away for a moment, because I'm going to show you the pre-market. So what's the damage? Amazon down 5% down, Tesla's down 4.6%. Even big banks are falling. JP Morgan, Bank of America down more than 4%. Google, Microsoft about 2% down. Apple another 4% down. Nvidia 3% down. Meta 3% down. The selling continues unabated. And I think it's important we understand these concepts here. So let's run through these, my friends. Smash the like button. I know it doesn't feel like a positive day, but you can do something positive here. So why are we actually crashing this hard this morning? Well, as one of my Asia-based mentors messaged me this morning, if you hadn't noticed, China just put a 34% tariff on all American imports and is controlling rare earth exports and is doing anti-dumping probes into certain American companies, mostly in the commodity space. So what does that mean? What does this actually affect mostly? What does the US sell to China? It's not trainers or, fashion or cars even. It's mostly agricultural stuff. So it's basically your soybeans and your sorghum and that sort of thing, which probably goes mostly into animal feed, I would imagine. That's quite a lot, actually. There's really quite a lot of that stuff going in there. So the US agricultural sector is not too happy today. There are rumors there'll be bailouts for US farmers, but for the moment, this is the story. So markets not happy about this at all. How bad is this? Well, yesterday was the 29th worst day since 1980. Doesn't sound like, oh my God, it's the worst day ever, was it? But look, this is like what's normal? Like, this is normal, right? And this is what we had yesterday. Sort of a real outlier. It's pretty freaking rare that the market's down 4.8% in one day. Very, very, very rare. So definitely not a good one. And well, how bad is it? The fear and greed index, it was 11 when I screenshotted this. I think it's actually gotten worse. I think it's now 6 or something like that. Let's have a look at the only useful thing that CNN has ever done. And drum roll, 6. It goes from 0 to 100, by the way. So it's definitely extremely, extremely fearful. Now, does that present an opportunity? Yes, it does. What does Warren the Buffett say? He says, buy when others are fearful and sell when everybody is greedy, right? Now, is he buying? Not that we know of as yet. He doesn't have to disclose it immediately necessarily. So now, is it actually all tariffs? Not quite. There is something else out there which most people are overlooking. It's really weird that nobody's really talking about this. Okay, so the Federal Reserve prints money, right? That's what they've been doing. Now, they've been shredding money for some time, and you can literally see that on the chart here on the left. And as they're shredding money, guess what happens to the stock market? As they're printing money, guess what happens to the stock market, right? So there is definitely that correlation there as well. They're just tightening the belts, and that's making this worse because there is a little bit less money flying about. And when money is a little bit rare, well, there is just, a stronger impact than we had here. So does that make sense to you? If that makes sense to you, put a 1 in the chat. So I know that this lands for you, and I just explained it in a way that actually made some sense for you. So the real question then, of course, is how low will the market go? This is a screenshot here from Trade Vision. In fact, I can open it for you in full screen mode because that'll be much more useful for you. By the way, I got the wrong banner down there. The support line, okay, lots of ones, brilliant. I appreciate that. Just so you understand, there is something a bit more deep-rooted here than just the temporary tariff thing. The support line was at 540. At that point, we know that market makers, hedge funds had to buy some S&P to kind of offset their impositions. It's called hedging. It's a little complex, but that's what they have to do. But right now, we're trading at 525 pre-market. So we've dropped $15 lower, which is an even bigger gap than the one from yesterday. All right, let me see if I can illustrate that with a little box here. So this was yesterday's gap down, right? And today's gap down looks like it's, am I allowed to draw that box? No, it says, do not draw this box. Why not? Okay, you get the idea, right? So the second box is meant to be that size. Okay, so it's a bigger gap, although as I drew it, it's actually only till there. So, but it's a slightly bigger gap down than yesterday. So this is definitely not slowing down. It is not the buy the dip moment, my friends, when you gap down on the S&P index in the morning. This could go significantly lower. That's the morning here. Yeah, sorry, not what you want to hear, but that's what the chart says right now. So what do we do on a setup like this? We look at the VIX, the fear index. And remember, I pulled this up for you yesterday. If you joined me yesterday, actually, I've been talking about this for absolute weeks. And I was saying yesterday, the VIX is a fear index, which tells you how is the market feeling. When we're below 20, everything is wonderful. Everything is pretty good. When we're above 20, it's sort of time to start to panic. Right now, we're at 40, where are we? At 39. Okay, we were almost at 40 briefly just. We're at 39. That's double where panic starts to set in. So this is pretty bad. This is really pretty bad. And therefore, you definitely do not want to be buying the dip today. Just not a good move. Really, really not a good move. When you get the VIX going up like 30% in a morning or something like that, you want to sit back. You want to go for a walk, and preferably don't open your brokerage, provided you have risk management built in already. If you don't, we'll talk about that in a moment. But yeah, this is not a good development. Really, really not a good development here this morning. And I say that with a smile because I've actually got some $60 VIX calls, which are actually making money, which was like a hedge, which is weird. They're not meant to make money, but they're making money this morning, like $12,000 up or something. And I was like, that wasn't meant to happen. So that isn't a good thing. Although, well, what do you do now? Well, look, I was not going to do this. I was literally going to do this in about 2 months because we've been working on this for a while. And I wanted to launch and teach you guys how to really become amazing long-term investors. Because I know we talk a lot about trading here and shorter-term moves and so on. And I do both. Half my money I trade, half my money I long-term invest. Now, a lot of you guys don't want to manage your money that actively. You don't really feel comfortable trading and all that kind of stuff. And I get that. You have a different life and you don't want to do all that much. I totally get that. So what I'm going to do for you literally tomorrow, and I've been working on this all day, mostly yesterday, and I'll work on this all day tomorrow, to get ready for you, because I didn't want to, well, it wasn't meant to be ready for some months. I will teach you tomorrow, how do you learn to pick great long-term stocks and therefore bounce back from this crash? Because there will be a rally after this. It doesn't feel like it right now. But once the VIX calms down, once everybody kind of like accepts what's happening here, there will be a massive rally after this. And there'll be winners and there'll be those who panic and lose their shirt. And I want to teach you the actual rules that Wall Street's been using for 50 years plus to actually pick great stocks in these moments, because there are opportunities. I'm starting to see the beginning of some really great value opportunities already. So if you want to join me live tomorrow at 11 a.m., I said yesterday we'll open 1,000 spots. Well, I woke up this morning and 1,300 of you had signed up. So you broke my room. So I've upgraded the room to 2,500 spots. Okay, because I appreciate, a lot of people need help in all seriousness right now. I think this is the moment where people feel the pain, and then therefore you realize you need help, and you have a lot of questions like, what do you do with your stocks? What do you do with your portfolio? Should you sell? Should you buy now? What do you do later? And particularly for people who are closer to the retirement age or planning that early retirement, does not feel good, right? So I get that. I want to fix that for you. So if you want to come and join me tomorrow at 11 a.m. New York time, so just a little bit later than we are right now, at felixprehn.com/webinar. It's completely free. I reckon we'll go for 2 hours, because there's a lot to get through. There's a lot to teach. And there's a lot of questions that I'm sure you have that I want to be able to answer in a more like educational kind of quieter setting with the market closed and all of that. So come and join me tomorrow. I'm excited for it. Slightly exhausted preparing for it, but it's good fun and it's what I love to do. So it'll be really, really good fun. And I just had a chat actually with one of my mentors who's been, he led massive brokerage teams and licensed financial advisor and run trading floors inside banks and so on. And we were just running through stuff and be like, what would be the highest value that we could give people, especially if they're beginners in this moment. And we've got a plan and we're gonna execute on that tomorrow. So come and join me tomorrow. felixprehn.com/webinar, my way of helping you through this tough spot, right? Very, very tough spot. So George, you need a psychiatrist. I recommend a golden retriever, to be honest with you, much cheaper. Well, actually, I don't know about that. They eat a lot. Now, this is what nobody expected to happen. Literally, nobody expected this to happen. And by the way, I'll put the link to the webinar also in the chat here. There it is. So you can just click on it. I'll pin it to the top of the chat so you guys can literally just click on that, felixprehn.com/webinar. Now, what just happened? The biggest jobs data out there isn't unemployment, it isn't job openings, anything like that. It's this random little thing here called non-farm payrolls, NFP for short, non-farm payrolls. And that just came out like literally 40 minutes ago. We were expecting 100,000 new jobs to be created, 100K jobs. We got 228,000 jobs, more than double what was expected. So first of all, we should probably fire all the economists that make the estimates, because there they are. Here are the Muppets. Who was worst off? Citigroup, 95,000. Moody's thought it was 100,000. UBS 180. Bloomberg actually was closest with 200,000. Bank of America not that far off with 185,000, but they were all wrong and they're all getting paid multiple six figures a year, these guys. I don't know why. So what does that mean? It's really not what you wanted today. You actually didn't want there to be lots of job creation today. And the simple reason is that if you have lots of jobs, what does it mean? It means the Fed will not cut rates. Why? Because lots of jobs cause inflation. Right? Now, thankfully, the average hourly earnings came in as expected. So no like panic there, but it just says to the Fed, the economy is strong. We don't need to do anything here. Now, the anointed one, the chairman, speaks what time? If you're going to Trade Vision, by the way, you can access that. There are upcoming events here always on the top, and you can just click on all events, and you can get yourself a free trial of the Trade Vision. There's something free for you today. Fed Chair Powell speaks at 11:25 a.m. today, so that's an important one to watch out for, because he's going to have to say something about what the heck's going on out there, right? Markets dropping like 10% in 2 days. That's something he's going to have to talk about. You won't really be able to avoid that one. So what should you avoid? What stocks should you avoid today? As I just rubbed something in my eye that stings. Maybe it's the red of the market. This is from Bank of America's quant team, smart people. And they made this little chart to tell us what sectors are most exposed to foreigners, trade. Most of their customers are overseas. And there is one sector that is definitely the most potentially affected. It's this one here. This whole thing here, which is about 50% or so. It's about 50% of sales comes from overseas. And that's infotech, so technology, information technology. That's the most exposed. Materials would be second, but yeah, it's mostly infotech. And that's also one of the reasons you're seeing this horrible little thing here with all the Mag 7 collapsing, right? Like really, really, really hard, because a lot of that is, information technology. So that's probably what we should avoid. Now, what is not exposed at all to pesky foreigners? That one here. Can you see that? Utilities. Makes sense, doesn't it? Utilities usually sell electricity, water, gas, that sort of thing domestically. Maybe they sell a little bit to, I don't know, Canada or Mexico or something, but very, very, very little. Mostly that's a domestic business. So that's probably a good place to look right now. And in fact, what stocks to buy, and of course this is not a buy recommendation, but there are literally only two sectors I'm looking at right now. Literally only two sectors I'm looking at right now, and I'll share that with you guys inside the coaching programs over the weekend. One is utilities. I think there's some opportunities there because bizarrely, some of them are also going down. And it's Coca-Cola and Co. And by and Co, I mean just sort of that general like fizzy beverage sector. I think there are some definite opportunities there because, well, let me show you. Like, while your portfolio is largely bleeding, if you own something like Coca-Cola, that actually went up the last week or so. And even yesterday, it was like 0.4% down. It's like, nah, not really affected. Pre-market, where is it? Pre-market? How come I don't have a pre-market number for that? Is the market open? No. Well, that's weird, isn't it? Where is Coca-Cola? Co-stock. Pre-market, it's down 1.6%, just a little bit there. Possibly on the China news. They have a significant business in China, obviously. But I don't know if they're going to hit Coca-Cola with it because they make stuff domestically, right? That's how they do it. They actually bottle and manufacture everything in every market locally. So that's the sort of thing that I'm looking at. I'm not telling you buy Coca-Cola, but look, we're pretty much at the same highs we were at since September. In fact, we've taken them out. Now, this morning we might dip a little lower, but that's the sort of thing that we're looking at as potential opportunities. McDonald's, okay, that could be another one, yeah, in that general space there. British American Tobacco, okay, yeah. So Philip Morris, I think, also did reasonably well yesterday. So there's always something. I think Philip Morris is actually one of the few green squares here on the pre-market. So there's always something if you know where to look and if you know how to look. And in this kind of moment, you don't just want to randomly buy stuff just because it's down a lot, because what's a lot, right? It can go down a lot more, You wouldn't have thought that the S&P overall would drop like 8-9% in 2 days, would you? Well, it can do it again. It can do it again. It can do it again. It can keep going. It doesn't happen all in one day, but it can keep going. So we don't want to buy falling knives. What we do want to do instead is buy amazing, high quality, great companies for a song, for a steal, at a discount on the cheap. And that's how we come out of this swinging. And that's what I want for you. I want you to come out of this and go, that was the best freaking dip of my life. And I'm looking forward to the next crash because it's going to make me so much richer, so much faster, and I'll retire so much faster because I accumulated all these great stocks. That's where I want you to get to. And we might not get there today, but tomorrow will be a big step for it if you come and join me tomorrow. Here's the Coca-Cola chart. And so while you think of your questions, sign up right now for the live session tomorrow, live webinar tomorrow, where I will literally teach you how do we actually pick great stocks. How did we actually pick Palantir, for example? Someone's asking about that, Alan, there, right? I'll actually show you how I originally picked Palantir. It wasn't some magic insight. It wasn't a headline. It wasn't the exciting product. It was nothing to do with that. It was actually two very, very simple rules. And once you understand those, you'll just look at everything very, very differently. And that's what I want to achieve for you tomorrow. And I'm going to work on that presentation probably most of the night and definitely all of tomorrow to get ready for you and deliver the information and the skills that you need to not just survive this crash, but come out of it way, way, way better than you went into it with, right? And that's what we're doing. And I appreciate all you guys who are inside the coaching programs already and who are sending me lovely messages how we've helped to protect you and how you're very, very happy about that. Now, so go to felixprehn.com/webinar, sign up there. Link is down here in the chat as well. And what will be my advice for today? And this is actually genuinely advice. My advice for today would be sit on your hands. Sit on your hands. Don't do anything. Don't do anything at all. Even people yesterday, we did, big trades and stuff. You're probably bleeding. Even the more sophisticated people are probably bleeding. And we didn't see any dip buying yesterday during the day. All we saw basically was sell off, and sell off. And very, very, very little buy volume. So till that changes, till that really moves around, and one place we can look is the dark pool trades. Now, market doesn't open for another 7 minutes, but we can see in here, and this is inside Trade Vision again. There's a week's trial for it. You can play around with it, and you can see what was the big order flow yesterday from the big guys, right? And it's mostly bearish, and the few bullish things that they're doing here, they're mostly still quite defensive. I think they're mostly pretty defensive, like buying a call option at 5,000 isn't super bullish. So I would be very careful right now. There isn't really a lot of green in here. You see all the red? It's mostly red, right? It all says bearish, bearish, bearish. This is live data, right? So you get that when the market opens minute by minute, pouring in, and you'll see what people are doing. Look at all the Google selling here. Insane. That's a lot of money. It's really a lot of money being sold here. UAL, Tesla, Google, obviously a lot of index selling. So be careful, be cautious out there today. Don't rush into stuff. This is not the moment to rush into stuff because you don't know that the bottom is in yet. Peter, you're over leveraged. Okay, that sucks, my friend, and I'm very sorry to hear that. One, join me tomorrow. That isn't going to help you today. If you're over leveraged, you just need to look at how can you deleverage? What's the best position to deleverage? And that's not going to be an easy call because you're obviously underwater. And really, what you want to do is memorize this moment so that it's the last time it happens to you. And look, to most people, we have to feel some pain to actually get motivated to learn, right? You need to learn, if you're using leverage, how to limit your risk. Because, a stock can go from 100 to 50, and then from 50 to 20, and then from 20 to 1, right? There is no limit except the zero to how much money you can lose on something. So there are ways to reduce that risk. And that's something, you're going to want to learn after this. But at this point, unless you're super familiar with, say, options or something where you could, do something, buy a put option or something to protect yourself from further exposure, you pretty much have a hard place and a hard place to choose from. Unfortunately, what trades do you close? And that's why leverage is such a dangerous thing. I don't encourage it. I don't use leverage. I do use some options, but I use that in a controlled setting. I always limit the risk, right? So I know that the risk is $10,000 or $100,000 or whatever, and I've got that cash. So it's a unfortunate spot, my friend. It's going to be good that you'll learn this. And unfortunately, as I say, most of us have to go through pain to really get motivated to get good at this. And that way we also realize that if we're making money in a market that just goes straight up in a straight line, well, maybe we were just lucky, right? Let's just be honest about it. And really, it's in tough spots like this where you learn great risk management, where you learn how to make money in a tough market like this. And my goal is to guide you to that spot where you just learn those skills. It's not a question of ability, by the way. It's not a question of smarts. It's not a question of even experience. It's just a question of skill, like learning the skill. That's really all it is. Anybody can learn it. It's just a question of whether you want to or not. But you're feeling some pain there, my friend. So hopefully you're going to use that pain to push yourself into actually learning. Now, I wouldn't think Palantir is affected by tariffs, says Mickey. Yeah, I wouldn't think so either. And of course, that's again where there is potentially opportunity with stocks that aren't affected. But then Palantir is trading at like, I don't know, 400 times PE or something. So a lot of that valuation is based on just market momentum. But look at the chart. Palantir hasn't dropped that much, right? It actually isn't down that much. Certainly not that affected by the tariff news. This is why. But still, overall market sentiment will mean money just leaves the stock market. Money leaves what are perceived to be risky stocks. And that might open up some opportunities for us. Should be short VIX, says Pedro. Nope. It can go to 100 plus. COVID, it went to 85, right? That COVID VIX to 85 literally bankrupted several hedge funds who thought VIX is at 30, let's short it, right? So if you want to do something like that, you need to know how to limit your risk. I do that, but I know how to limit my risk, and it's a little too complicated to explain at this point. You can buy a call option or something that's cheap, much higher. There are things like that you can do, but it's one of the most complicated instruments out there, so you don't want to be gambling with that unless you know how to do it. Do it in a paper trading account. Just literally paper trading account in Thinkorswim or in Webull or something. Just do it in a simulator and learn from it. That's a great thing to do. Don't do it with your real money. You might get literally blown up. G. Moore is going to look after some geriatric chihuahuas. Have fun. Don't get bitten, my friend. Winston has the right idea of sleeping. He does, doesn't he? He's actually snoozing under my chair here. Let me see if I can get him onto, where is he? There he is. Winston is my chief financial researcher, of course. There he is. He looks pretty relaxed, doesn't he? He looks pretty relaxed, I think. Hang on, there we go. Sort of literally under my chair. You're right, Winston. He doesn't want to be on camera. A bit camera shy today. Yeah, all right, okay. He's had enough of this market. That's what he's saying. So, hit me with your questions, my friends. That's why we do this live. Market opens in one minute. Should we be buying put options at market open, says Holly? Probably not. They're insanely expensive right now. So probably not. No, the time to buy put options is when you don't need them. It's not when you need them. They're too expensive. All right. Okay. You guys are typing some things in here. Heat map. Oh, you don't want to see it. It's ugly. it's really ugly. This was the pre-market. Our market is just opening. It won't be that different, but it's pretty red. It's pretty red. Pepsi is up. I did mention Coca-Cola might be something to look at. SoFi is tanking to $10.10. That's another gap down here, which is definitely not pretty. Let's run through some of the big tech stocks out there. Palantir 683, what? Where is it? Where is it? What's happening there? Let me just hit the refresh. There we go. And yeah, that's a gap down. Now, Palantir itself, it doesn't make a lot of sense that it's affected as a business, but it's just momentum. Everything is basically going down. Nvidia is gapping down for the second day in a row below the $100 support. Let's see if that holds. The market overall, Q, and Q, is looking pretty hideous. Monster gap down here to $440, well below the 450, well below the 450 support. So yeah, not looking pretty as well. Tesla is opening strong, is it? Yeah, it's rebounding a little. It's true. It's true. It's at 259 here. Let's have a look at the minute chart there. And hang on, where are we? Where are we? Where are we here? Okay, this is a minute chart here. Okay, yeah, there's a little bit of buying here at the first minute of the day, and then selling follows in minute 3 of the day. So I wouldn't hold my breath too much, but at least it isn't a gap down. Alpha Charlie, your puts are printing. Congrats, my friend. You might want to set some sort of exit rule on those in case there is some magical recovery because the Europeans are caving or something like that. It doesn't sound like it at the moment. Everyone seems to be kind of like, oh, let's be strong about this, which is, of course, the dumbest thing to do. But that's not up to me to say. Are most people trading with their emotions in this market? Most people are always trading with their emotions. My mission here is to make you invest and trade without emotions and with rules instead, because it's a lot more profitable. Apple is getting hit pretty hard as well. Second gap down here, a little bit smaller than yesterday's gap, but still below 200. Google, do no evil. Google is trading below the 150. Ouch. Microsoft is, and there are some fears that the apparatchiks in Brussels might put tariffs or more tariffs on American software companies. They already have a digital sales tax, which is basically a 20% VAT. So gap down here on Microsoft as well. Dollar cost averaging through it all. Look, personally, I'm not a big fan of buying stocks when the VIX is over 20. The VIX is the fear index. And right now it's trading at, what's it trading at? Let me hit refresh here. I think we're breaking the chart data because it's moving so quickly. We appear to be at about $36, if I'm not mistaken. $37.25. Yay. So we're about twice as high as we'd like to be to feel comfortable about buying stocks right now. We jumped all the way up to 45 today, which is well, highest since August. So that's a bit of a milestone. You see, in August, we briefly jumped much, much higher to 68. So yeah, panic is all around us. It's everywhere I go. Renate, am I pronouncing that correctly? She says, I used a stop loss like Felix showed, and I'm glad I did. I got out with profit, now waiting for the right moment to get back in. And I love you for that. I love you for the discipline. You know, women are actually better risk managers. If you, and I know 95% of you are guys, if you involve your better half and let her be in charge of the risk management, you will make a lot more money. Trust me, seriously. Bring your other half to the live training tomorrow, the live webinar tomorrow, because if you do it together, you make more money. It's like all the research shows. It's completely true. I think about probably 10% of my students are women. They tend to do better than the guys. Why? They are more risk averse. It just seems to be something in the human sort of psyche. I guess it's about survival of the clan rather than, let's go and fight. So yeah, fantastic. Good job. And you know what that means? If you exit sooner, so say you sold Tesla, up here when it said sell at 421, say, right? And now we're trading at 250. So literally just think that through for a moment. if you had 100 shares and you sold at, say, $420, right? That's $42,000 that you're sitting on right now, right? So when you buy back into Tesla, and I'm not saying buy back into Tesla today, but say you did and it's trading here at 255. So how many shares would you get? $42,000 if you were to buy back in at 255, and I'm not saying you should, you get 164 shares. So what happened is if you buy back in, you get 64 shares for free. Right? So if provided the market recovers back to where it was at some point in the future, you are 64% better off. But it doesn't stop there. Because next year, say Tesla goes up another 10%, right? Just say, you have 100 shares, well, you make 10% on the 100 shares. You've got 164 shares, you make 10% on 164 shares. So every single year, you make 64% more than you would have done otherwise. Because every year you gain, right, on the base amount of capital you have. So if you lose capital, it's really hard to recover. If you protect your capital, you make more money every single year till the end of time. And that's why Renata here, our friend, is a smart cookie, because she's using risk management. So that's really what you're going to do. But then the next question, of course, is, well, what do you buy? Do you buy Tesla at this level? No, I wouldn't buy Tesla right now. But there are things that we might want to buy that are worth looking at and have amazing valuations. And I want to share with you tomorrow, how do you look at those fundamentals, like for the long-term stock investment, not for traders. If you're a trader, like I think we got you covered. But if you are somebody who just wants to buy stocks so you can retire with those stocks, right? Whether it's in a year or in 10 years, or if you're already retired and you just want to live a better life without the misery of corporate slavery, then building a long-term stock portfolio is usually the path to do it. So how do you do that? Well, let me show you that tomorrow. Come and join me. I'll teach you the rules. Now, Bartos is talking about tax. Yeah, people always come out and go, oh, but if you made money in the market, you'd have to pay tax. Yes. So you pay 20% tax, you get to keep 80% of the gain. Forget about tax. It's really not the thing that makes or breaks the bank. It's all about actually knowing what to buy and when to buy it and when to sell it. That's the whole game. And if you're paying a lot of tax, capital gains tax, you're doing an amazing job, right? And then obviously you might want to think about how to optimize that and do it on a Roth IRA or something. But generally speaking, people sort of use this excuse of, oh, I don't want to make a lot of money in the stock market because no, then I have to pay tax. That doesn't make any sense, does it? Because wouldn't you rather have, like, say 80% of that money than none of that money, right? You want to make profits. You want to make lots of profits. That's really what it's all about. Now, are there any cheap options to buy today? Very unlikely. Options prices are determined by VIX largely. So when the VIX is doing what it's doing right now, the fear is at some crazy level, 37, then no, everything is expensive. And that's just the way it works. The question, if you're supposed to buy fear, why wouldn't you want to buy the VIX when it's super high? Because it's going to come down and you're going to lose all your money. Like look at the August spike, right? We spiked similarly here. And what happened then? We collapsed. So you don't want to be buying VIX. Plus, in the long run, VIX always goes down. It's not something you want to own in the long run. Colin, you wish you knew about me 30 years ago. Well, the second best time, I mean, the first best time, of course, was, yes, learn how to invest 30 years ago. The second best time is when? Today. Like, that's just the way it is. Like, best time to grow and plant an oak tree was 1,000 years ago. The second best time is today. So you can't go back in time yet. So therefore, today is the best time. So come and join me tomorrow. will teach you and set you up to make your long-term stock portfolio. This is for investors. This isn't for traders. Make your long-term stock portfolio the best it's ever been, and the best returns you can make from a crash that you've ever seen. That's my goal for you tomorrow. Now, or why wouldn't you buy the VIX when the stocks is high? Because the VIX tells you how much the market's going to move, right? So when the VIX is high, it's telling you that it's very likely that there is going to be a crash. So why would you buy the beginning of a crash? Right? Well, why? Why would you do that? Why wouldn't you want to wait for the panic to subside and then buy the really good stocks once they're recovering? Because what if we go another 20% down? Right? Would you feel good about that? Probably not, right? So generally speaking, you want to buy after the dip, not before. And that isn't an exact science, by the way. I totally appreciate that. But generally speaking, a super high VIX is a warning sign. Don't buy stocks today. That's basically what the VIX is saying. VIX is a current indicator or a leading indicator. I disagree with that, actually. It predicts the S&P 500 movement for the next 30 days. That's precisely what's underneath that. So it's predicting significant market movements. That's basically what it's predicting. Let's see Powell's speech. Yeah, let's see. I mean, I don't know. I wouldn't rely on him, but it's entirely possible. And Freddie says, I remember 2008, 2009, and it can definitely fall another 20%. Yeah, and I'm not saying it will, but it can. So why would we use our dry powder for this setup right now? It just doesn't seem like the sensible thing to do. It's a gambling thing to do. We don't gamble. We follow rules, right? And look at that. The QQQ is trading at its almost the lowest it was at today. So it isn't recovering intraday here. The selling just happens and continues unabated on pretty strong volume. Richard says, hit the like button. I appreciate you. Yeah, 3,500 people watching, 500 people hit the like button. I get it's a bit of a glum day, but maybe we can motivate one or two of the other 3,000 to do that, so we can help a few more people out here and spread some information. Nasdaq's already down 20% from the highs. Yeah, but that doesn't mean it can't go lower. You know, it's just lower can always go lower. The limit is well, not quite zero, but something like that. Yeah, we're 20% down here. So that brings us into basically bear market territory, which psychologically isn't a great place to be. But you know, we're trading where we were in September. It's not that big a deal at this point, right? Or where we were in August. Even in August, we went lower. We went to 423. So risk management is what it's all about right now. And then taking a deep breath and position yourself for the great quality companies out there. And there are some really great quality companies out there that are getting cheaper and that still have some momentum and some drive in them. And that's really what I want you to think about, rather than just buying things because they're cheap. Because, you know, the AMD crowd has been saying that AMD is cheap for the last, year, right? Well, it's getting cheaper every day. That doesn't mean people are making any money with it or are happier. It's at $87 this morning, right? And there is actually an exemption on semiconductors, on chips, on the tariffs. So, you know, it's just doesn't actually make any logical sense. But yeah, don't buy falling knives, my friend. Just don't do it. Now, what do you suggest to do for long-term holders, mostly Tesla and NVIDIA? Look, I can't give you personalized financial advice in this space because it's illegal. The SEC would pull me up. I think you got to look at the fundamentals. You got to look at, so that's one thing. First thing is like, what are the fundamentals of those companies, right? Are they improving? Are they getting worse? Right? And secondly, what's your time horizon? Do you not need this money for 5 or 10 years? Is this 5% of your portfolio? Is this 90% of your portfolio? Like, what's your cash flow? Do you have cash? Do you invest every month into new opportunities? You know, How are we going to diversify you away from just those two names? Because that's an insanely risky thing. And I've been saying this to people. I said this all the way through the COVID rally. I said, no, don't go all in. Don't be 100% in one stock. Don't listen to those Muppets because it's going to bite you in the ass. And it always does. But often someone telling you it isn't the same thing as experiencing it. Now you're experiencing it, hopefully it's going to sink in a little bit more. So you want to come up with a strategy to transform your portfolio. That doesn't mean you need to sell everything at the same moment. It depends very much on what you own and a certain time horizon and so on, and allocation. But you certainly want to make a plan of how you can make that a little bit more less risky, right? So say you want to retire in 5 or 10 years. Well, you're not going to want to retire just with those two stocks, because what if something like what's happening right now happens and, they fall by 50%? Suddenly you're not retired quite so comfortably. So how do we do that? By buying more high quality companies based on some very simple rules, 2 or 3 rules. And then we implement some simple risk management, which means that we sell out of these things near the top, certainly before they collapse, so that we don't become these bag holders who own these falling knives in whatever name happens to be the latest thing on social media, right? So come and join me tomorrow. I'll teach you a lot of that stuff tomorrow, as much as we can possibly cover at felixprehn.org/webinar. It's a free webinar I'm running to kind of stem the panic and help you guys turn this into an opportunity and accelerate your wealth growth coming out of this crash. Because what happens after every crash? There's a rally, right? Who misses the rally? 99% of retail investors. They miss the rally because they get fearful. So they stop buying, and they should be buying in exactly that moment. So we're going to cover all of that tomorrow and more. I saw more than 1,500 of you have already signed up. So I extended the size of the room that we have in our webinar to 2,500. So there's another 1,000 spots completely free of charge, 11 a.m. tomorrow. felixprehn.org/webinar. The link is in the chat. Now, Ella says, still believe in Tesla and Nvidia. Time horizon is 2 years. And look, belief is nice, but I think it's mostly a thing for church on Sunday, or temple, or whatever it is that you go to, or belief isn't really what this is about. Belief is, well, it's hard to measure. So we prefer to do things that are measurable, because that's how we make money. And it's not like, think about all the hedge funds and the investment banks out there. Do you think they sit there and they go, we all strongly believe in this stock? Do you think that's how they make money? Like, Citadel, biggest hedge fund out there, made $35 billion last year. Was that based on a belief system? Just ask yourself that, right? Do you think they can hire bankers and traders and say to them, what do you believe in? It's not what it works, of course. They actually have rules. They have a system, and they say, look at this metric and that one. And if they say more than 10% or more than this number or more than that number, that's when we buy it. And when it changes, we sell it, because we know that historically that's what drives the stock prices, right? That's what I want to get you into tomorrow. And it's much simpler than you think. Takes less than an hour a week for sure. And it just means that you are safer. You very likely make a lot more money, and therefore you accelerate your financial freedom journey. You accelerate getting to retirement, and if you are already retired, you retire better, which is really what it's all about. So you don't end up with, dumb stocks like this one here, which is trading at whatever it's trading at right now, $88, $87. Now, let me scroll down here tomorrow. Remo, just joining today. A friend of mine recommended you. Well, say hi to your friend and say thank you to him. I appreciate that. They believe in making money, or the bankers. Oh, yeah, that's of course true. Yes, greed is good. You have to swear an oath to greed when you join banking. Okay, let me see what else we got here. Citadel doesn't believe in anything. Yeah, that's probably also true. Well, money. I think they believe in money. Freddie, thank you very much. Colin, thanks very much too. So yeah, I think there we are. I think let's leave it at that, and come and join me tomorrow. Session is here, felixprehn.org/webinar. Be live. I'll be giving up pretty much my entire Saturday because I'm still working on it to teach you guys. So come and join me, learn. It's a one-time opportunity, and just turn off the brokerage today. That's pretty much what I would do. And I wish you all